All right, welcome everybody to the Real Estate Mogul Podcast. I'm your host, Tom Caffarella. I am super excited about my guest today, Sharad Mehta. Sharad, what's going on today? Anything good?
Not much, man. Yeah, excited to be on the podcast and talk to some of the new investors that you guys have. Hopefully, they can learn a couple of things.
Absolutely. Definitely with your background. I mean, you've done what now? Over 200 deals in your real estate career?
No, I would say at this point it's close to 500 now. Yeah,
500. All right. Well,
yeah.
I saw you on that Bigger Pockets interview and it said 200. So how long ago was that?
That was about almost 3 years ago.
Okay, cool.
Yeah.
So 500 deals. We've got some people on here, I'm sure, that have done somewhere in that vicinity, but most of us are probably in the beginning stages, either just getting started or trying to do 10 or 15 deals in a year. Can you
Okay.
walk us kind of to the beginning of your real estate investing career? I know that you started 7 years ago. What did
Right.
that actually look like?
So I started out buying. I used to live in Chicago. I live in Carlsbad, California now. I was working for an accounting firm, Ernst and Young. In 2000.
Accounting firm. Oh man, that's not
Yeah.
good. So I work for Grant Thornton.
Are you there? Yeah.
Yeah, for 2 years, I got my CPA licensing. I hated it. Did you like Ernst and Young? Did you like being in accounting?
I didn't really like being in accounting per se, but I love being around like motivated, like-minded people. I think that was good, and being in that setting. I didn't really care so much about the work, honestly, but it was good to be in that setting. Just get that, learn about how the corporate world works. So yeah,
So did
but
you did you do your first deal while you were an accountant, or you just started getting interested in investing back then?
no, I did my first deal while I was working, actually a couple of deals while I was working full time. So I started, I've always been into personal finance. So I read all the books from Dave Ramsey, Susie Orman. So that's been very, big influence on my life. So I was always with a background of, hey, my wife and I, we've always lived on lower of the two income, saved
Mhm.
the higher income, invested it in other assets. So when my wife and I, we both started working, she actually worked for Deloitte when I was working at Ernst& Young. So we come from a family of accountants. uh,
Competing against one another,
oh, she's way better than I am.
huh? Smart
But
man to admit that.
yeah, I know, I'm just being honest. Yeah. But we were looking to invest our assets in, we're looking to invest our savings in different assets. I tried investing in stocks, bonds. I mean, I even signed up for some services, that help you pick stocks. And I was probably the worst stock picker in the world. I should have just picked, exactly opposite my gut instinct. So I started looking around other options. And then I came across a book called Flip. I think it's by Gary Keller. I can't even remember.
Hmm.
And then in the Amazon, it gave me a suggestion for another book that from a similar author called Millionaire Real Estate Investor. So, that got me excited. So I ordered that book, read it, and it kind of just, made sense to me. And the more I thought about that book, the more I'm like, yeah, this is what I want to do. I want to be a passive investor. So I started investing into rental properties. That's how I got started. The first property I bought was a 2 unit back in August of 2010.
Hmm.
And then I bought a 3 unit after that. And then, I did the numbers. I'm like, oh, this makes sense. I mean, just like at the price point I was paying back in 2010, it was a no-brainer, honestly. So I was investing in right outside of Chicago in Indiana market,
Hmm.
Northwest Indiana. That's where I still invest. It's like half hour to 45 minutes outside of Chicago. So I started investing there. And then in March of 2011, I left my job to kind of do this full time.
So one of the things that you mentioned, I think that's pretty interesting. I kind of started out exactly the same way, where I was just reading kind of every book, and I didn't really know myself either whether real estate investing was the thing for me. Um,
Right.
I went to a bunch of different types of conferences over the years, stocks, trading for options, all that good stuff.
Right.
What kind of made you realize that it was real estate and not a bunch of other things that made sense for you specifically? Because I think when people are starting out, there's kind of all these little things that they're considering doing.
I mean, I think the main thing was the passive income. You're making money even when you're not actually working. You don't have to think about it. And what I like about real estate also is that you control the entire asset versus investing in stocks or bonds. You control a very, very tiny percentage of the company.
Mhm.
But with real estate, you own the entire asset, or you own like a large percentage of it where it's significant, and then you have some say in how the asset is being managed.
Makes sense. So 2010, you bought your first property. It was a 2 unit. What do the numbers look like there?
So it was on the market for 65,000. I offered 20,000 on it. We agreed on, I think, 22.5. I spent maybe about 7 to 10,000 on that property. So it was all in for about 30 to no more than 35,000. And we rented both units for about $1,200 a month. So 600 each.
So what were you making there a month? $1,000 a month, somewhere around there for cash flow? 800, 900?
Uh, yeah, it's about 800.
That's awesome. So that
Yeah,
was your first deal. Now, were you managing that yourself or did you have somebody else do that for you?
I was managing it myself.
And how did that go? And would you recommend it for newer investors?
It's not that bad. Actually, I would recommend because, if you're managing as your portfolio grows, I have a property management company now that manages all the properties, but it was good for me to start out managing my own properties. So I know what to expect from a property manager. So I would say it was definitely a good experience talking to the tenants who were calling, showing them the unit and seeing what sort of questions they have. So that helped me. We literally, like I wrote down a script of anytime anybody calls, I wrote down a script. Hey, this is exactly what I need to ask. So I wrote down like word for word what I'll ask them. And I had some notes on if they say this is what I have to ask them. If they say that, I'm going to reject them as an applicant. So that was definitely a good experience.
Now, did you do that on purpose? Did you know you were kind of systematizing your business right then and there, or was that just something you kind of did by accident almost?
I think it came from working at Ernst& Young, using a lot of Excel sheets and then just figuring out a way, hey, how can I make it more efficient so I don't have to do the same thing over and over again. I can just do it once and then it kind of have a system built in. And then around the same time, I came across a book called E-Myth. So that had huge, huge influence on my business.
Yeah. So what I'm hearing, and it's something that I see with all successful people, is you're an avid learner. And I'm assuming that these aren't the only books you've ever read, right? You already kind of in the beginning stage of your career, rattled off 5 or 6 of some of the best books. I'm assuming you're continuing to learn forever, right?
Yeah, absolutely. Yeah, I mean, I don't read as much about real estate, because every night before I go to bed, I read for 30 minutes. That's a ritual. Otherwise, I have a very hard time falling to sleep. So every night, I switch between a fiction and a non-fiction book. I'm reading like Kill a Mockingbird. So I'm reading that because I figured, okay, it's a nice fictional book. But yeah, every day I'm reading something, watching some motivational video to kind of just stay focused and always be learning.
Awesome. So you
Right.
bought your first 2 unit. You bought it at probably the absolute bottom of the market or very close to it. Got a great deal. You renovated it. You were cash flowing on it. What was your next move from there?
I bought another property 3 weeks later.
3 weeks later? So
Yeah.
you didn't even have the first one rented out before you bought the second one, right?
Yeah, I don't think the first one was rented out before I bought the second one. I mean, yeah, I had an offer in on the second one even before the first one closed. So, yeah, I mean, it just, the numbers made sense. I mean, if I'm going to go in on something, I'm going to go all in. Like, why do something half-heartedly?
So when you say the numbers worked, what were you looking for back then? Was it a cash on cash return, a monthly cash flow? Like what made you determine that they were good deals?
I mean, I was looking for minimum 15% cash on cash back
15%.
back then. Yeah.
And so but the numbers you got were probably better than 15% cash on cash, right?
Yeah, so that was my lowest, but some properties are getting 20, 25, even 30%. But
Yep.
15 was my absolute bottom, that I'm not going to take anything under 15%.
So you said that you lived in Chicago, right?
Right, downtown.
And you were buying in Indiana. What was the
Correct.
reasoning for that?
That came from the book Millionaire Real Estate Investor. It talked about when you're looking to buy a property, literally where you live, just draw a radius of an hour drive from where you live. So I drew that radius, and Indiana fell in that 1 hour radius. And that, I mean, honestly, living in Chicago, I didn't even know Indiana was literally right next door. I mean, no offense against Indiana, but when you live in Chicago, why would you care about Indiana?
Yep, yeah.
But now, I mean, I fly there every month. Next week, I'm going to be in Indiana. But yeah, that was my reason. I drew a circle and 1 hour drive from where I lived in downtown Chicago, and Indiana was part of it, Lake County. And then that just got me curious on, hey, that's interesting. So I started reading more about it, learning more about it, comparing it to the Chicago market. And just, it turned out Indiana was more landlord friendly, high rate of return, more, you get more value for your money. So it just made sense. Then I drove out there, met a couple of real estate agents, looked at properties, and then just went from there.
So I think one of the things you mentioned that's huge is the landlord laws per state.
Right.
I'm in Massachusetts, where the laws heavily favor tenants, but I also border a state, New Hampshire, where the laws are more favored towards the landlord. So tell me a little bit about how that impacted your decision and what the differences were between the two states for you.
I mean, Chicago, like, property taxes were much higher, and then it's not landlord friendly. So that was my, based on all the research that I had done, I wanted to invest in a place that was landlord friendly. If I had to do an eviction, that it was not going to take very long. So I looked into the eviction laws. In Indiana, in the Lake County where I invest, if I need to do an eviction, it takes no more than a month. I mean, in the winter months, around the holidays, maybe 6 weeks, but that's just completely different from Chicago. I did a joint venture project with another investor who he lived in New York. He bought a property in Chicago that, I wasn't involved in. After he bought the property, he found out that there was somebody living in the house. So we had to go through, the legal proceedings, court, to get the person out. So he bought the property in May, and we did not get the person out until May of next year. So it took 12 months. And he actually wasn't even living there. There was no gas, no electric, no water, no utilities, but he basically wanted to get some money out from the investor. So in the end, we settled for, I think, about $5,000. We paid him $5,000, and he just moved out, or he signed paper that he doesn't live there anymore.
It's crazy that you have to potentially pay people to move, right?
Yeah, exactly. I mean, that's the sort of stuff that happens in Chicago.
Yeah, same exact thing in Boston. And it's interesting, again, bordering states, how they can be so different.
Yeah.
And when you're talking about, buying and holding, those laws are a huge impact on whether or not you're going to end up cash flowing every month. And I think the thing that I think is the biggest shame about it is for smaller investors. I mean, that can knock them out of the game, right?
Yeah.
If they buy a two-family, they don't get paid by one or two of the tenants. They have to hold on to it for a year. We buy a lot of properties from, landlords that own one or two properties, and then they just can't afford to hold them anymore. And they sell them to us at a discount because it's either sell them to us or, they lose them altogether.
Yeah. No, I mean, that's tons and tons of people like that in Chicago or, other markets like that. If you don't know the laws, and in some cases, honestly, the tenants know the law better than landlords do, and they're going to take advantage of it. And there's nothing that can be done. You'll get super frustrated, but it's just something you have to deal with.
And so how were you buying properties back then? Because the market was so much different in 2010 than it is now in 2018. Were you just buying properties on the MLS or online?
MLS. Yeah. 95% of what I bought was from MLS. I mean, it's different now. Maybe 2 or 3% of what I buy now is from MLS, but back then, like 95 to 98% of what we bought was from MLS.
Yeah, so that's, another interesting thing is that, I mean, that's going to change again, right? I mean, the market's kind of getting overheated as we speak in 2018. And at some point, buying properties off market isn't going to be as effective as it is, today for investors. Can you even cash flow now in the markets that you're buying in if they're not off market?
Yeah, I mean, we can. It's the cash flow isn't as much as what it used to be, but there's still cash flow. I mean, it all comes down to the value has gone up definitely since back in 2010. But people are looking to invest. It's not that only real estate has gone up. Everything is at its peak or close to its peak. So you're always comparing with, okay, if I don't invest in real estate, what other options do I have? I
Mhm.
think people investing for cash flow, they're in better position, or doing short-term flips. In my opinion, they're in better position versus people are buying for appreciation. Because
Right.
appreciation is something, you don't know if that's your only strategy, that's your only objective is to get appreciation from a property. You don't know if it's going to go up or not. But if you're buying something, let's say you pay $100,000 for something and it cash flow today, even if the market value drops to 50,000, you're still getting cash flow. It sucks that you've lost 50,000 worth of equity.
Yep.
At least that was my investment, mindset. Look, I'm going to buy something. I was buying everything with cash. I have, maybe 5% of my portfolio has mortgage on it. Everything is owned free and clear. So when I went in, my thought process was, okay, I'm going to buy these properties. I'm going to assume the second I close on it, they're worth absolutely zero. They don't have any market value. I'm not looking to sell them. I'm looking to grow my portfolio. As long as I'm cash flowing with my all-in cost when I close on them, that's all that mattered to me. Yes, it's going to suck that the value goes down if it goes down, but as long as my rent is not going down, I'm okay with that.
So now you've bought 500 properties. Have you held on to all of them, or do you
No.
sell some of them? How do you exactly do it?
So now I'm doing a lot of fix and flip. We sell properties to other investors, as a turnkey property. We do a lot of fix and flip to homeowners. So that's what we do a lot of now.
Okay, talk a little bit about that because people in my market are having really tough time finding
Right.
properties to cash flow, and I'm assuming, but I don't know this, that a lot of your customers are probably in areas where they're having a difficult time getting cash flow still, right?
Yeah, we have a lot of investors from California, a couple of people from Chicago, some from New York. Yeah, I mean they're all investors looking to invest from like market like Massachusetts, basically Boston market,
Yeah.
where prices are super high, but they still want to invest in cash flow. So they're looking to invest in Midwest market or other lower price markets where they can get some cash flow. So those are the investors we sell a lot of our properties to.
So the typical turnkey process is somebody like you is going to buy, go out, solicit to sellers in your market or the market that you're buying in,
Right.
buy them under market value. You're going to renovate them. You're going to get a tenant in there, and then you're going to sell that deal to an investor who wants cash flow and then manage it for them. Is that the
Correct.
process for you?
Correct.
So for somebody, and are you still doing all Indiana or are you in other markets as well?
Just Indiana.
Okay, so what do the numbers look like today in 2018? Someone in Massachusetts or California or some super high priced area wants to get into a cash flow property. What does it look like for you?
Our typical property, we sell anywhere from 90 to maybe 110, 120,000.
Yep.
It rents anywhere from 11 to $1,400 a month.
Okay.
Yeah.
11 to 1400. All right. So the rule that we kind of use, and I don't know if your investors use it as well, but we usually like to buy properties all in for less than 100 times what the monthly rents are. And so
Okay.
that number right there works with that 100 times
Right.
rule. And then you're managing it for them as well. And basically do they have to ever come out there and look at them, or how does that work?
It's up to them. Majority of the people who bought properties from me, I've actually never met them. I've never even seen them. But the way we run our business is very transparent. We tell them what we're doing is not rocket science. We're buying a distressed property. We're fixing them up. This is what we're doing. We're updating mechanicals, cosmetic, roof, whatever needs to be done. We put a tenant in it and we sell it to you. I highly, highly recommend that an investor comes and visits the market. Even if I'm not there, I don't have to be. I don't need to sell them on what we're doing. We have a team of people that work for us. So they will meet them, and then we tell them, look, this is the property, this is the lockbox code. If you want to go visit, unannounced, you're more than welcome to. You can see everything we're doing, and then we send them pictures, videos of everything we're doing at that property. So yeah, I mean, some people, I would say 50-50, maybe half of them actually come visit, and maybe I met about 30% of the people who have invested with us.
Mm-hmm.
Yeah.
So you mentioned that most of the properties that you buy right now are off market. how are you getting face to face with the sellers or getting in touch with the sellers before they go on the MLS or Zillow or any other public website?
So we buy a lot from foreclosure auction. We buy a lot from referrals.
Yeah.
We buy from, we started doing our direct mail campaign. So we're buying from direct mail campaign. So I send the letter out, but I don't meet the seller in person. I have my project manager. So she knows, what we're looking to buy. We'll get a call. We have a Pack Light service that answers all the calls. And then, the people we're interested in talking to, we'll go talk to them. I mean, actually, my project manager will go talk to them. She'll call me on a video from the house. We'll make an offer. If it goes through, we'll buy it. If not, then we'll move on to the next one.
And these are all single families?
Yeah, we just got a property under contract that last week. It's a 2-unit property. It needs major lead abatement work done, but again, we'll take on any kind of work, lead, asbestos, mold, foundation. So, we're taking on a big lead abatement project, but it's a 2-unit property that's going to rent for about $2,200 to $2,300 for both sides.
And how many projects are you typically working on at any one given point in time?
Right now we have about 18 to 20 going on. Yeah.
18 to 20. And so how do you manage those? Do you use general contractors? Do you have people on payroll? How do you kind of get those projects done typically?
So the people that are working for us, we have enough projects for them that basically we keep them going from one project to another. We don't have them on our payroll, but we keep them busy enough that just they go from one project to another for us. They don't have any days off in between. So we have projects lined up for them for the next couple of months. And then in the next 2 months, we'll buy more. So just keep going on and on for them.
So people always say to me, well, how do you find good contractors? I've been burned by so many. I have a difficult time finding them. And then somebody like you seems like they've got good people working all the time, keeping them busy. What's the key? Where do you find good contractors and how do you keep them honest with everything?
To find good contractor, I think what I would recommend is you go to church or wherever you worship, pray to God every single day to send you a good contractor. I'm telling you, that's like the toughest part of the business. But the team of guys that I'm working with right now, they've been working with me for the last 3 or 4 years. It was, I found the guys that are the main contractor that I'm working with who does majority of the work through Craigslist. I started him off with a small job and then he was doing a good job. Then I gave him a bit bigger project. And so he is super honest, fantastic guy. This is somebody that I can trust. I can give him $50,000 in cash and say, hey, just hold on to it. I'll take it from you next week. And I can just trust him. He's not going to run away with it. I've had guys that, when I was working at Ernst & Young, one of the properties that I bought it in September, so we had a pretty cold winter. So in December of January, one of the pipes froze, and I sent this guy over, and he said it's going to be $3,000, and he was saying, oh yeah, this happened, that happened. I'm like, oh whoa, that's $3,000 sounds like a fantastic deal. I'm like, yeah, do it. And now I would get the same thing done for maybe $400 or $500. So obviously he didn't, he knew that I didn't know much, so he took advantage of that. But the people that I'm working with, so, they won't do that because they know it's, they've been working nonstop for us for 3 years. No days off in between unless they want to take some time off. So we have a couple of crews of contractors, like our carpenters, roofers, painters. And then we have a plumber, electrician, HVAC, and then a landscaping company. We use a different company for garage doors. So we have 8 to 10 different people that we work with, but our plumber, electrician, HVAC, and the carpenter crew are the ones that go in on every house.
What's the typical renovation for you? Is it a 2-month project, a 3-month project, a year project, or is it all over the map?
I would say 4 to 6 weeks is our typical, project. Some 4 to 6 weeks on majority of our project. If we're doing a big flip project, maybe a couple of months, but yeah, this is if you don't run into any weather related issues, if you don't run into any permitting issues or any of that. But yeah, anywhere from 4 to 6 months for a typical project, and then maybe up to 2 months.
So we talked in the very beginning about you buying, one property and then a few weeks later you had another one under contract and you just kind of, jump in with both feet. Now you've got 18 to 20 projects going at one given point in time. Can you kind of bridge the gap between what happened between the first two and the 18 to 20 at once over the course of the last 7 years?
So what I started doing was after the first 12 to 18 months when I was buying properties for myself, I actually got in touch with a company out of Australia that was looking to buy properties in US. So they had started out buying up properties in Phoenix. So they had some questions about, so I flew out to Phoenix. I helped them close on a 60 condos out of a 300 condo complex. So they were buying 60 condos in that complex. So I flew out to Phoenix, I helped them, and then we started talking, and they were looking to, so they had a bunch of investors from Australia, individual investors who were looking to invest in US real estate because the exchange rate was very strong.
Mhm.
So, we started talking and they started to, they got interested about investing in Indiana. So it just kind of took off from there. We helped them buy a bunch of properties. I think they bought maybe like 250 properties through me in maybe a period of 3 to 4 years. So that kind of died down around 2014 or 15 because the US dollar started getting strong against the Australian dollars. So that business kind of slowed down, and then I started focusing more on a regular fix and flip that we were doing, and then started selling to US investors.
So how did you hook up with the Australian company?
There was a referral through a friend. So the CFO of the company, of an Australian company, he was actually a cousin of my friend. So that's how we got connected. And yeah, no, I mean, then we're actually looking to reconnect and maybe start off. So he left the company, looking to start off and maybe do something again. And then I'm actually flying out to Australia maybe in November or December to just restart that business.
Interesting. So
Yeah.
what does your day-to-day kind of look like today?
So today, I mean, Monday is a little bit more hectic because, we're looking to get everybody started. But I mean, honestly, like, even though we have 18 to 20 projects going on, I'm not very involved in them. We bought and sold properties without me actually ever stepping foot in any of the houses.
Yep.
And that's how I like it. So I'm going to be in Indiana, for example, next week. So I fly out Tuesday. I fly to Chicago airport. So I fly out Tuesday. I'll be there Wednesday, Thursday, Friday. And if we have a new property that we're looking to buy, I'll stop by that house. But if there's an existing project going on, unless I need to be there, I probably won't even stop by because we use a lot of technology. We use WhatsApp. We have our own software actually that we're developing for project management. So we use that to keep on top of all the projects. So on a typical week, if I'm spending more than maybe hour and a half on all of those 18, 20 projects, something is going wrong if I have to spend more than hour and a half on managing those projects.
So what's the structure though to get that done? Like what are the systems that you have in place? Is it people? Is it tools? Like how are you able to get all that work done without you being heavily involved?
I would say people is the number one. I mean, this won't be possible without the people. I could have the best systems in the world, but if I don't have the right people, then nothing is going to get done. So having the right people, majority of the flips that we do, we use the same material, especially on our turnkey properties, same paint, same flooring, roofing, same faucet, fixtures. Like that's a decision we don't even make. It's like we don't even get involved on, hey, what are you gonna do with, like, my plumber or anybody? They don't call me and say, hey, what do you want to do with the house? It's no. I mean, we bought the house. This is what they know what the end product needs to look like, and then just whatever we need to do to get it to the finish line. They know that's what needs to be done, and
Mm.
then they'll go in. They don't even send me the estimate. So I have an office manager. They'll send her the estimate. She'll talk to them. She'll get them to sign the agreement. And then every Friday she'll send me, hey, this is who we need to pay for this week. I'll just pay that. And that's pretty much it. And then they'll send us. So on our WhatsApp group that we use, we have a group for each of the contractors that we work with. So we have a group for plumber. We have a group for electrician, HVAC. So anytime they go to a house, they take pictures or videos and just keep us updated on what's being done at that house. And that's how we stay updated. So we're not checking on them every day. Basically, they understand the more efficient they are, the more projects they can do. If they slow us down on something, then that slows everybody down. We're not able to buy less houses, and that money is coming out of their pocket at the end of the day.
So are you selling any of your fix and flips to retail buyers, or is it all going to investors?
No, we're selling to retail buyers. Yeah, we just got like my agent called me, so we put a house on the market on Thursday for 145. We had an offer the same day, full asking, but then we got another offer a couple of hours later. So I just told my agent, she's also my project manager. I said, look, just let's give them until Monday for highest and best. So we got an offer, and then I said for 152,000, and then she went ahead and signed the offer for us.
So what percentage are being sold to retail buyers versus investors, roughly?
80-20, 80 to investors, 20 to retail.
And that's, so if you had listed those retail, would you get less or more money, or about the same?
For turnkey?
Yeah.
We'll get a little bit more money.
Selling retail?
Correct. But again, our cost will go up.
Why would the cost go up? Because of the traditional listing process?
Correct. So
Okay.
right now we don't list anything, any of our turnkey properties.
So what's your biggest challenge today? Is it getting good deals? Is it keeping up with the projects? Is it cash? Like what are you focused on the next, 3 months to a year? What's your number one?
Getting more projects.
Yep. And that's just due to the fact that you're having a tough time getting really good deals?
Right. Yeah. I mean, we should be doing a lot more. I mean, we have capacity to have 30 projects going on at the same time, but we're looking to buy more. That's our number one priority. So we just hired another person. So we're going to move our project manager in the role of acquisition. So she's going to be focused just solely on acquisition and just managing some retail projects, not the turnkey projects. So turnkey project we can do. My office manager is actually, she also lives in California. She's been to Indiana a couple of times. So I fly her out once a year during the holiday time so she can meet everybody. But she manages the entire turnkey project from California, like the entire rehab project. So yeah, the number one priority is acquisition.
I think that's true kind of across the board, right? Because it's such a tough market to get good deals in. Retail is just selling for so high. Where do you see the market going over the next few years?
I don't see it dropping. I think it's going to continue to go up at least for another 2 to 3 years. Unless something happens outside of real estate market, like if the stock market crashes, or I don't know, I mean, just hypothetically, like if you go into war or something, something extreme happens. I don't think real estate on its own is going to collapse like it happened back in 2008 or 9. Then again, we have the next election is 2020, so something could happen in that year. But at least until then, for next couple of years, I see it continue to go up.
Okay.
There's very, very strong demand from homeowners. There's demand from investors. So I don't see it slowing down, at least at this point.
Now, I don't know your market, as well as I know mine, of course. Does your market, I feel like some of those Midwestern states, they don't have the peaks and troughs like we have. Like, how is the Indiana market impacted, the last crash?
It didn't go down a lot. I mean, I started investing after the market crashed, when there's nobody else buying. So I don't have the perspective of saying, oh yeah, in 2005, this is what was happening, but this is what started happening in 2010. I started investing at the end of 2010. So my experience, my, viewpoint is based on what I saw from 2010. It's been going up steadily since 2010, especially in the last couple of years. The market has been super strong. You see a lot of investors in the market. You see a lot of homeowners, like the house we put on the market on Thursday evening. We had offers Friday morning, and we got a bunch of offers over the weekend. So those were all from homeowners. So there's definitely demand from homeowners, there's demand from investors, very high demand from tenants to rent property. When you start looking at the difference between what a homeowner would pay in mortgage versus what a tenant pays in rent, there's a pretty big difference, like at least if a tenant is paying $1,000 to $1,200 in rent, the mortgage for the same house would be about $600. So you still have that gap. So I think that's going to continue to push up the prices a little bit, to the point where it gets more in equilibrium. So I see that happening in the next couple of years.
So right now, 2018, what's the biggest opportunity that you see in the real estate market?
The biggest opportunity is, learning more about the market, because there will be a dip in the market in the next, 3 to 5 years, I think. So learning about the market, getting your systems in place, having the right team, just being ready for that opportunity, even if you're not doing, tens of deals a year, even if you're doing one deal or two deal a year, it's still, if I were starting out and I bought a house, I would wait. If I have to just wait on a project to work with the guy that I feel comfortable with, if I have to just sit on that project for a month, it's okay. I'll sit on it for a month to work with the guys that I want to work with. Like, we have 18 projects going on. Not every single project is being rehabbed. We have projects that we're going to start rehab in a month. We could hire somebody else and start the project, but we don't want to do that. We trust the people that we're working with, and we'll wait for them to be ready for that project. So I would do that if I was starting out. Just, have the right systems, have the right people. So as you scale, you're ready for that opportunity. You're not being slowed down because you're not ready with the system to scale up.
I've got one final question for you. So we both came from an accounting background. What would you say?
Unfortunately.
Hey, I got fired from my job because I would come into work.
You're lucky,
I tried to do it. I couldn't do it. I was reading literally about real estate all day long, to the point where they actually asked me, are you in real estate? And at the time I wasn't like you. And I actually started doing my first deals while I was, full time. I was just reading about it.
Right.
So what would you say to somebody who's in a job that they hate, that wants to get into real estate? Was it worth it? And what advice would you give to them?
I mean, job was of course worth it, because, that's the money I used to start investing. I didn't love what I was doing. I was doing, you're an accountancy, and I was doing like international tax, I think form 5471, or, for international corporation. I hated it. I had no idea what the hell I was doing. But, you have to take advantage of whatever opportunity you have. You learn from, so these are, if you're working for a large company, you see something is being done right, learn from that opportunity. What is the owner of the company, or what is your manager, or whoever you're working, what is it that they're doing right? So when you eventually you leave your job, you go out on your own, you have that thought process, hey, that person that I was working with, Joe, he was doing this fantastic. I wonder if I can apply that in my real estate business. You learn, for example, working for an accounting firm, you're going out, you're presenting your projects to these big corporations. So learn, how to present, if you're in front of a private money lender, you want to come across as very professional, somebody who knows what they're doing, the same way as, somebody from Ernst & Young or Grant Thornton, they're not going to go in and just try to wing it. They're going to go in with all their information ready. They know their facts. So you want to come across the same way when you're going and meeting a hard money lender or a private money lender. So, you might not actually like the actual work you're doing, but, focus more on the things that are good about the job. You learn the discipline, getting up every day at 7:30, working till 5:36 or whatever your hours are. You get up, you learn that discipline. Okay, look, I have to be here. I have to do this every day. That's something that I struggle with. I work from home, so I love it. Every day I take my son, I have a 16-month-old. Every day I take him to park. That's one of the things. Like 5:30 to 7, I'm with him. My phone is switched off. Everybody in my team knows I can't be reached. So, but I'm learning the discipline of, okay, if I'm working from 8 to 5:30, I have to be working. I can't be wasting my time on something else, because then when I'm spending time with my son, then I'm thinking about, oh shoot, I had a bad day today, I felt distracted or whatnot. So you learn those positive things from a bad job. Don't focus on the bad, just focus on the positive, the things that you can learn and apply to your business down the road.
I love it. So how can our listeners reach out to you if they want to invest in Indiana real estate or just want to reach out to you to talk?
Yeah, I mean, they can reach out to me by through my website, maxpropertiesllc.com, maxpropertiesllc.com, or they can find me on LinkedIn, Sharad Mehta, and they can reach out to me. If they have any questions, anything that I can help with, I'll be more than happy to.
Cool. Yeah. And on maxpropertiesllc.com, he's got a contact us form
Yep.
and a bunch of information. You've got actually, you've got even some upcoming turnkey properties that you're selling, right?
Yep.
All right. This is perfect. Well, a lot of information you shared. I want to thank you for taking the time to come on the podcast. Thank you again. This is Tom Caffarella from the Real Estate Mogul Podcast, and I will see everybody in just a couple weeks. Thank you, Sharad.
Thanks, man. Bye.